Yeah, this Nadu here, your Forex coach. I would like to do this live analysis for you on gold. And right from the month of January, between January and December, we we saw the yellow metal gold, begin a bullish run and uptrending market. You can see that happened all the way from here, accumulating huge amount of pips in that bullish run. So the market making higher highs and higher low, and this actually was driven by the war in Europe, the Ukraine-Russian war, which caused a lot of tensions in the markets. That geopolitical news caused a lot of investors and hedge fund managers to avoid risk and hedge, the markets, pushing all their resources on gold, which of course, acts as a safe haven, currency. All right. So this actually was what happened. Price moved up to $2,070 per ounce of gold before the correction started. And of course, this 4-hour time frame for gold. Okay, so I observed something here which you can see as a reversal pattern. Okay, this is the shoulder, head and shoulder pattern. So this is the left shoulder, here is the head, and here is the right shoulder. So this is shoulder, head, and shoulder is usually a reversal pattern, for an uptrending market. So observe that here it picked and gave us this pattern. When this happened, markets, broke below the neck area here. So it broke below and then continued to produce this long impulse. All right. So in markets wave analysis, we see that price will always make an impulse and then there will be a pullback. Using Fibonacci retracement tool, we observe that most of the retracements, particularly deep ones, most of them will have to happen between the 50% and 61.8% retracement. That's the zone that I put here. You can see that zone. After this move, this bearish move, market have been doing an elongated, is a prolonged kind of correction here, prolonged correction that you see here. Price is seen pushing, and it got to this level. This is 61.8% retracement of this first bearish impulse. All right, and I observed something again here on hitting that 61.8% handle key reversal area. All right, price made a double top kind of formation, and this double top also is also another sign of reversal. You see, price reversed at this point, made this impulse and did all this correction, and have to do a double top pattern around the 61.8 handle, which also is a final indication for the corrections. Okay, I had to come here. I traded the combination of technical factors and of course with a background of fundamental issues going on that will favor or cause market to move in the direction of my speculation. All right, and before now, there have been a lot of talks on how to end the war in Ukraine, and of course, anytime you see a development, a positive development, okay, it will cause those safe haven currencies that most investors have pushed their investments into to preserve value, okay, to begin to drop. So they pull it out. Is like a risk off, risk on situation. So anytime this risk on situation mood is triggered in the market as a result of an improvement in what caused the risk of situation, whenever there is an improvement on that, you see those safe havens dropping in value, and that is what exactly is happening today, gold. And of course, the rhetoric by the Fed is seeing the greenback, as the United States dollar, to gain some value. You can see this correction here at this 1.8 handle. The correction, seem to have ended, and market price is making another move in the bearish direction. So we see this as an impulse from here to this point, and all this correction waiting for another impulse coming all the way from here to this point. So you can compartmentalize your trading charts to get to certain levels where the markets will correct, get to the point where the market will reach and correct. So we identifying those areas here. That long bearish move, and gold price is seen to begin the kind of correction that we are seeing here, maybe in a 5-wave correction, which we identify here. 1, 2, 3, 4. It's completed the 4th one, and it's expected to move back up to 1957, around 1957 handle, before price will be expected to crash from here, to complete this ABC kind of pattern that I'm seeing here. You can see it from here. 1, 2, 3, 4. So this looks like an ABC, wave pattern. So where you have this correction, when the correction finishes in these 5 waves, expecting the market to drop all the way to this point, and the first level that you expect to take your profit is here at the 1894 handle. And this being, see this dotted line here, has been a strong level of support over the time. You can see it here. Price tested here, tested here, tested here, and again here. It tested it here, did the same here. So it's expected for a price reaction around that 1894 level. All right, but this is not the final destination. Market price could be seen to get all the way down here to complete this, to balance this impulse. You see, from here to this point, we'll expect the market to also do the same here before we see the gold doing some of that thing. But you have to keep an eye on the fundamentals, because that is very important. The fundamentals are key to ensuring that your speculation, your direction of speculation is well driven. So while you're looking at these charts based on what we have seen here, we saw the reversal sign here. There's an impulse, a correction which completed here at 61.8% handle, and it did this first impulse, running a correction, expected to finish the 5th wave at around 1958. When that completes, we expect another impulse to this level of support. So I said, while you are watching this and trading it, please put an eye on the fundamentals. There's been serious issues with inflation around the world, and also the Fed is promising hiking interest rates. But we've seen historically the inflation rates, inflation figure of America has gone up to 4 decades high now. From 1981 till today, it's not been as high as this, about I think it's 8.5% level. And each time that the Fed had intervened by taking these actions of hiking rates and putting up some contraction levels, trying to limit inflation, it has leisurely led the economy into recession, into restriction. We're maybe being pessimistic, expecting bad days for the American economy. Might enter into recession when the Fed intervenes with their tightening measures. Okay, we observed that 11 out of 14 times that the Fed had done this, it took the economy of the United States into recession. This may not be very good days for the American economy, but we have to keep our fingers crossed to see what actually will happen, in the end. Of course, when that effect begins to take place, you see all those metals, gold, silver, even oil, and even agricultural products, gain a lot of strength, because everybody will have to hedge, using those commodities. All right, so let's keep our fingers crossed and see what happens. If you like this video, if this helped you, we'd like you to click that like button and also like, share, and then you can subscribe to our channel so that we can make more videos of this nature available to everyone. Thank you so much for watching. See you in our next video.